Good morning, everybody. Hey, no! Welcome to the Gold Standard Radio Network Live Time Drive Radio Show, 6:53 a.m., February the 21st, 2026, if we can believe this already, as we march our way into spring. And I can definitely tell, not only because the snow has almost completely melted and the temperatures are above freezing this early morning, but it is light now at 6:53 in the morning. Or not light, but it's not dark. We're at what we would call dawn, right? The sun's about to come up, when usually that didn't happen for another hour or so the last 3 months or so. So we are definitely marching our way out of winter and into the springtime season. Just like we're in a crypto winter right now, we're trying to get into a crypto spring. But I think crypto spring seasonal feedback is a little bit longer than the winter time here in the northern hemisphere, as I think we still have another couple of months and capitulation to go in crypto winter before we bottom out and we go into springtime. Oh yeah, the snow is pretty much all melted from yesterday, and I don't think it really got below freezing overnight, so it continued to melt overnight, and there's considerably less snow than when I got home from work yesterday at 6 o'clock at night. But if we look at the Bitcoin price, you guys don't care about that. You guys care about the fucking coins. And so we're going to talk about the coins. You can see the Bitcoin price did have a nice move, but it's still exactly where we were 1 week ago. If we zoom out to the hour time frame, we are still sitting along or just on and just around and near that 200 day in the weekly time frame. And that's exactly where we were last week. We've been trading along it for, let's zoom out. There we go. That's what I want. We needed the longer time. We've been trading along it and near it since February 4th, 5th, right? We peaked down about February 5th, started coming back up February 6th, and then we've been trading along that and near it for about almost 2 weeks now, right? And last weekend, we were at the same spot we were. We're just nipping, we're almost sitting right on the 200 day in the weekly, right? And we know we need to get above that to have a nice positive spike up. Same with all these coins. And last week, nothing really happened. They just consolidated. In order to get up near that 200, the 50-day moving average in the daily time frame, which is sitting at 63,000, you need to get above this 200 day in the weekly. And we've just been trading sideways on it. So if you pump up and the volume comes in when you do, because eventually you will break this consolidation and have to move big to the upside or big to the downside. And that's the same with all of these coins that we're going to talk about today. And the upside is that 50-day in the daily, which was sitting at 83. It's probably at like 80 now. I haven't updated it in about 2 days. And the 100-day moving average in the weekly time frame sitting up there at 85,000. But, and this is a big but, because I do believe the gold standard's forecast remains the same and consistent, is we're coming down to 51,000 eventually here in the short term. And I don't think that's our bear market low either. But I think we're coming down there. And from the current price, that's a pretty substantial move. From the 200-day moving average all the way down, that's another 25 to 26% to the downside. And it's 25, 26% to the upside on the pump also, which is that's kind of usually how it works. There's equal ways up or down when they're about to make a major move, to keep indecision and not knowing exactly what's going to happen, right? But you can see this. And that's where you're going to break down to if the volume and the momentum and the move comes to the downside. So that's what we're watching here. And I know it's boring and nothing's changed, but nothing's changed all week in these coins, right? Nothing's changed. The same with Ethereum. We're still consolidating in the same area with Ethereum, just above that blue support and resistance box, right? I know you can see this, right? So we're either going to trade back down to that 1782 and then eventually break it to the downside and break it big, because I do believe eventually this is going to be near your low, a potential low, but you could go lower to 400. But I think you're going to retest and have to this bottom part of this box. That was a major resistance zone when you were trying to break to the upside, when you broke the $1,000 and ended up flying and soaring another 4x, right? So I think that's a critical area, and eventually you're going to get down there. But if you can continue to hold while you trade sideways, and even if you dip down to the 1782, but you hold it, the 2060 to $2,600 is your major upper resistance. It's 200 day in the weekly time frame. And those are the areas that we're still watching, and those are the areas that we were talking about last week, but we didn't do anything. XLM and XRP did bounce and had the full lateral move. We went from 14.5 cents in XLM all the way to 18.75 cents, just below that. And that was your major resistance point, and you got harshly rejected. And what you did here all week was you traded down like we thought. And you haven't hit any support yet until you got just above your old prior low into this major local consolidation range right here where there's liquidity. You see this? How you stagnated sideways shortly at 6:59 a.m. on February the 21st, 2026. Gold Standard Radio Network. Become members of Jabroni Killers. Video description and or pinned comment. Help support and grow the page. Keeps corporate, most importantly interference out. Keeps us in full control of the channel and keeps you, the retail trader, informed. With no paid promotions, no corporate sponsorships to infiltrate and manipulate and fleece the audience. We're not doing that. We're here for you. The Gold Standard is here for the retail trader. You. I'm talking to you, the one listening to this right now. We traded down to that major supply zone, and now you're either going to run back up into that still don't want to buy you, still don't want to buy you. Thank you very much. Run back up to that 18 cents, which is your major upper resistance, and then try to break that and move up to the 50-day moving average at 20 cents, or you're going to fall very quickly back down to the underneath support that you bounced off of down here at that 14 cents, 14.5 cents, and then you're going to break that and work your way down towards the 10 to 12 cents. And that's what we're watching in the XLM. The XRP is the same thing. We had the big full lateral move here also, right? You see that? We went from about $1.11, $1.12, and we swung all the way up to just shy of $1.70. And now we've traded down the whole week from where we watched at the beginning of the week, where you had the nice reversal to trap some people, grab some liquidity, get the manipulators out where they wanted to, and trap some more retail on a false, misleading, and a misread signal by the uninformed and misinformed retail trader. And now it quickly traded back down. And look at if you would have bought this local pump, which you're down already. And if you were just trying to swing trade it or thought you were doing good, you're down 15 to 18% already. And now you're trading on the 200-day moving average in of the weekly time frame, right? And if you break the weekly time frame, you're breaking down quickly, and you're coming down to the $1.12 like that, right? Bam, you're gonna fall off a cliff to that $1.12. And then unfortunately, your next major underneath support in XRP is 90 cents, right? And I know some of you are like, whoa, Vincenzo, back up. Wait just a minute there, Gold Standard Vincenzo. You're sitting there telling me, you're fucking telling me, the retail trader, that this thing, this price, this XRP is going back down to 90 cents. Yeah, I think it's going back down to 90 cents. Abso-fucking-lutely, right? And I think it could go down even more into that blue support and resistance box. On the upside potential, you got just shy of it. It's sitting there at $1.85, right? That's your 200-day moving average. That is your major upper resistance on any kind of local pump. And this will conclude another broadcast of the Gold Standard Radio Live Time Market Analysis and Crypto Talk. Remember, it's all about investments. You have to, if you want to become an asset millionaire, if you want to become a millionaire in general, you must own assets. You must live below your means. You must not be in debt. You must not, and these are all critical and unnegotiable and must follow. These are non-negotiable rules. And you must stay off of payment plans for furniture, car payments, cell phone payments, home improvement payments, refinance payments. You can't have payments. If you don't have the cash, I'm sorry. You must deprive yourself until you can come up with the cash or buy a cheaper version of what you want with cash. That's just the way you have to do it if you started with nothing and you want to become a millionaire. I started with nothing. We weren't poor growing up, but we weren't rich. We were right at the middle, right in the solid middle class. But as I ventured into adulthood, I had zero capital as I moved out. And what we do, we learned the hard way. We got the credit card, we went to the bars, we spent the money, we had fun, we partied, did a little drugs, had a little partying. Every dollar we incurred and had, we spent in our 20s, and we didn't know because we were stupid. We didn't have the financial education on what it took to turn no matter what your income is. And I don't want to hear the excuse, I don't make enough money, because it doesn't matter. The dirty secret, the cold hard truth, and the painful reality is it does not matter your income. You could make $1 million, but if you spend $1.1 million a year, you're broke. You could make $50,000, but if you